live. So I'm Michael Marinick, chair of Sandbox, and here with Zach Hamilton, who's our sort of resident expert on Bitcoin and cryptocurrency. And the way this is going to work is we have basically two ways to participate. One is by watching our YouTube channel, which is a live broadcast of our conversations that's going on here, and it will also be saved so people can look at it later. Or you can join our Hangouts directly to ask questions and participate in the conversation. There is a limit on the Hangout, which is why we also have the YouTube option. So if you're just planning on watching, I would say join the YouTube so that other people can join the conversation on the Hangouts. So Zach, I'll just turn it over to you and ask you maybe to introduce yourself. I know you've been working in cryptocurrencies, Bitcoins, especially on the financial side, for longer than most people have been talking about this. Recently started working, sort of putting together a hedge fund on cryptocurrencies. You want to share a little more about kind of what you've been up to?
For sure. So I worked in venture capital for, I guess, like the past 6 years. Back in 2013, we had the company Ripple come across our desk. If you know the crypto landscape very well, I think Ripple is number 3 or 4 in terms of market cap. They have a very specific focus. They're a little different than most cryptos, but that being said, we started investing in Ripple itself as an entity in 2013. After that, I was just playing with these. I learned really about Bitcoin, about Ethereum, about Ripple back when I was doing diligence for that firm. And since then, I've just been, again, playing. It wasn't real. At any one time, this could all disappear. The blockchain was something that was a project. It was all, again, it was a project. It was an experiment. We were investing in an ultra high risk startup, but it seemed to stick. They always had pull with the best developers in San Francisco. They always had just some of the smartest people I've ever seen assembled in one room, all working on this central goal. And that went really well for the company. But as of about 2017, the cat came out of the bag. The combination of consensus ledger technology and public key cryptography, those, when you pair them together, just made something more powerful than we've seen in a long time. So we decided back then, or I decided, to start a fund to help people invest in these cryptocurrencies or these crypto tokens, whatever you choose to call them. So that's been in formation over the past year or so. It's extremely difficult to make the traditional financial system interact with the crypto system, which is something we can get into later. But yeah, it's an investment fund. We invest like venture capitalists. We look at the underlying value behind these different tokens. We look at what fundamentally drives them, and hopefully their protocol structure influences the price. I also run a separate business or separate service where we help high net worth individuals and family offices invest in cryptocurrencies themselves, help them store it, help them guide them through the process of acquiring large amounts of crypto. Very hard to put more than a couple $1,000s to work at the moment.
Very cool. And I think maybe that's one place to start with is you mentioned there was a time where you were sort of like, is this even real? Is this all going to disappear overnight? Like, what is this sort of experiment? And it seems like people who have been in the industry for a while now feel a little more confidence, at least around.
I'm losing you. You're cutting in and out, Mike. I'm not sure if everyone else is hearing the same thing.
Also cutting out for us.
Just the audio though, Mike. Your video signal seems to be good.
Yeah, I'm still getting nothing. Can you type the short question? We'll wait for that bandwidth to pick back up. Gotcha. Okay, so the question is this real, or a lot of people are asking if it's real now. I think that there is a meaningful amount of money being placed into the system, a meaningful amount of fiat being placed in. There's also a lot of just speculation. It's pure hype and speculation on a lot of the coins. That being said, I don't really have a number to say percentage speculation versus actual value creation. I think, again, it's very real. In terms of investing in it as a retail investor who's just getting involved, there's a couple of coins that are, more stable than others. There's a couple of projects that are moving forward faster than others, specifically Ethereum, Ripple. You have Bitcoin there that is showing a lot of its issues in terms of its scaling factors. So, I don't want to say that it's now mainstream, because those of us who have been in this for a while, we've come to expect huge crashes. We know that there can be huge spikes and huge crashes, and then managing your emotions through all of those is the hardest thing to do. So, back in I think it was 14, it might have been late 13, Bitcoin rose to about 700. It crashed back to a couple $100, maybe at 150, and it stayed that way for months. So during that time is when everyone who was sold on this saw that it could be real money. A lot of people cashed out. A lot of people bought Lambos and just said, screw it. Like I've made a lot of money. Let's get out. A lot of people stayed in and tried to build more and more services. They tried to build companies around it. So that could happen again, and there's probably a high likelihood of it happening again, whether it be with Bitcoin or Ethereum. There's been large downturns that have turned down for a long time. The Ethereum fork with the DAO hack, major issues. Hundreds of millions of dollars have been lost or stolen. So that's something to keep in mind. That being said, it's 100% real. I mean, if you can trade it throughout the world for dollars or for gold or for services, it's real. If you choose to take a risky investment and it goes to zero, that's part of the risk profile. This is not a sure thing, nor is any investment.
Cool. So I'll try. Let me know if the audio is working any better now. So we just have seen Bitcoin flirt with 10,000, pass it, sort of fall back and return. What do you think about just in general the state of pricing? Is it crazy? Is now a time to get in? I mean, how do you even think about questions like that? And then think about it vis-a-vis, sort of the other currencies that people are also talking about.
Yeah, so I'm one of the people that has sold Bitcoin and bought it hundreds of times. I've bought it at 50, sold it at 300. I've done that stack so many times I can't even count it, because dollars today are worth more than dollars tomorrow. At the end of the day, I'm an investor. I'm not I guess I am a speculator, but the long-term creation of value is definitely possible. And this market should be the top of your portfolio. This should never replace something like real estate or any other hard assets. If we're talking about modern portfolio theory, and you have some, I guess I call it the cream at the top of your portfolio, which I think everyone does, because this is infinitely divisible and you can place a $5 investment here. I do suggest getting into it in some way, even if it's just to learn. So, we used to do this where we would just send some Bitcoin to someone to teach them how to do it. I gave my girlfriend one, I gave my sister some, and I put it on a paper wallet and said, if you can figure out how to spend this, it's yours. So that drove a lot of new people into the industry. But if you look at this and expect it to go up another 50%, it's probably not going to happen. Bitcoin's experienced some amazing gains, but relative to something like Ethereum or Ripple or even down the stack into Zcash, you're looking at smaller gains. So the farther you go down the market cap stack, the more volatility, and still also the more potential for gains. That being said, they're all super correlated. So I'll be releasing a data project here soon that everyone will be able to read to show how damn correlated all cryptocurrencies are to all other cryptocurrencies. Interesting. So is that to suggest that people who are then thinking, all right, maybe Bitcoin is overbought, but there's an opportunity to find the next one, that may be less of an opportunity than some people think? Yeah, I think there's always the opportunity to find a better investment. And one of our core theses is that Bitcoin, Ethereum, Ripple, they all solve a different problem. So you look for a corollary in the traditional markets and you look and see what this could take over. So if you look at Bitcoin, you see, what are the corollaries? You've got gold, you've got silver to an extent, you've got all these other stores of value. And you see if those can work together. Bitcoin does have a small, part of it that would allow contracts. It's just not well built. Now you look at Ethereum, where it is the world's distributed computer. It's the first network that's been built from the ground up to be this. It still has a lot of issues, but it's still built for that purpose. It's not built to be a store of value. And then you look at other things like Zcash that are meant for anonymous transactions. You want to do your darknet purchases, you're buying them with Zcash. So, there are use cases, but I don't think that there's a lot of room out there for another Bitcoin or a better Bitcoin. That's the first, that's 1.0. We're on to 2.0 in terms of very application-specific coins. Also, another thing, like they're correlated because most of the market's denominated in Bitcoin. We can talk about that more in, I guess, the intersection with the traditional finance market.
Cool. And so on that, that sort of the challenges around Bitcoin, a lot of people are wondering about Bitcoin interacting with sort of hard limits on the necessary computational power, the time that transactions are now taking to process. How do you think about these kind of like external hard potential limits that are kind of like lurking that maybe bound the opportunity?
They're there. Most people who are getting into this for the first time, they're usually signing up through Coinbase, which again, I highly suggest. I think they're a fantastic company, very reputable. They're the Fisher Price of cryptos. And I say that with the best intentions because Fisher Price is very hard to break. They do a great job, but also you're not exposed to the essence of Bitcoin. You're not sending transactions over the network. You're doing it all within Coinbase's centralized servers. So if you're trying to send Bitcoin from me to you, and I'm on the East Coast, you're on the West Coast, it's still going to take, 20 minutes now, 25 minutes to get a single confirmation. The transaction fees have spiked. You're now looking, I think last time I saw it was $5, but it's spiked up to a couple hundred at some point. There are major issues in terms of scaling, but that's a relic of just the network's core architecture and the fact that it hasn't been built for this kind of volume or this kind of use. It was an experiment and it can be adapted, but then you have a lot of political issues that are being swirled around the Bitcoin world of how to change the block size or how to improve the mining algorithms but to make mining better and make mining more efficient from a logical standpoint. One thing to keep in mind is everyone's against each other, and that's how this has been built. So the more people try to attack, the more people that are bad actors that are trying to make the network vulnerable, the stronger it gets, which leads to raw physical inputs of computing power. The person with the more computing power wins, and that's the way that it was designed to be.
And then, so one final question, maybe before we just open it up. There's been a number of questions, especially recently, on Bitcoin and cryptocurrencies interaction with the broader financial system. I think the current GOP tax bill has some changes in the tax treatment of Bitcoin. There are also, Wall Street is looking to get more involved with different mechanisms and vehicles. And then just challenges about, how you get money in and out in general. How do you think about this question sort of broadly?
It was really easy in the beginning because it wasn't worth much, so no one really recognized it. Now that it's being converted into fiat or being converted into physical assets, the governments are starting to pay attention. And I say governments because this is an instantly global 24/7 market. You have as much access as you do in Wall Street as you do in Malta. So, or probably more in Malta, in all honesty, because it's completely decentralized. So when you start looking at regulation, you almost have to look at something that's unilateral between every country or like governing body on Earth, everything that's connected to the internet. So I don't know about you, but I don't think all the governments in Earth are going to work together very well, especially in terms of regulation. So that leads the financial systems that are each individual that are only applicable to their citizens. So in the United States, we've seen a lot of, I don't want to call it smart regulation, but they're not too crazy. We've seen outright bans. I believe Vietnam has it completely banned. We've seen countries adopt and try to make this flourish. Switzerland has been a leader in this. But that's where these problems come in. You know, you have to clear anti-money laundering. You have to clear KYC. And we're seeing more and more of this because more and more interaction is happening with the traditional system. Banks don't like wiring to cryptocurrency exchanges. They make it easier to run away. Back in the 40s, if you were trying to get out of, say, Germany, or the 30s, you're trying to get out of Germany and you had a bunch of gold with you, that gold would be confiscated. You're trying to get out of a country now, that password's in your head. There's nothing to confiscate. You can't confiscate an idea. So it's just a whole new paradigm of interaction between people's store of value and them as humans. So I'm interested to see how regulation is going to play out. I think it'll be smart. We haven't seen anything too crazy yet. You're going to have to pay taxes on your capital gains. That's just life. But again, you're going against this core libertarian ideology of the crypto world that says that since it lives in the sky, since it's all decentralized, then it's not real. So you can't have both. You can't buy your Lambos with it and also not pay taxes on it. It's just the second it hits fiat is you're going to pay taxes or you're going to face consequences.
Cool. So with that, let's open up to some questions. And I think the best way to do this is I'll check YouTube. If people are watching the YouTube, you can just list your question in the chat. And I'll grab it. And if you've joined the Hangout, then feel free to just mention that you have a question you want to ask in the chat, so I can sort of see the order. And then feel free to just speak to it. So Thomas, did you want to just share your question over Hangouts?
Yeah, absolutely. So I was wondering, and thank you for doing this, by the way. But I was wondering how you mentioned, conducting due diligence on protocols and kind of digging into the actual company that's behind, or group of individuals behind a cryptocurrency. How do you go about conducting due diligence on protocols or business models that haven't really been tested yet? So a lot of these ICOs obviously are relatively theoretical in terms of how a market will react. Do you follow a certain mental model for doing that?
Definitely. So I think the mental model for ICOs is we don't do them. That's it. I don't. In venture capital, you would never give all the money to fund a startup up front. That's idiotic. Like, I'm not going to just hand a startup with 3 guys in a garage $250 million. Like, the obvious things are going to happen. Like what happens with what is happening with Tezos. There's going to be a lot of fraud. There's going to be a lot of mismanagement. Just you don't let kids play with guns. That's just the way it is. So in evaluating a company or a new currency, I like it to be exchange traded. I like it to at least pass the bar of several exchanges, not just the one that's in on the pump. That being, like, again, no insider trading rules, instantly global, completely anonymous. Like, pump and dumps are the norm. They're not an exception. So, I like to see something being traded on a lot of different exchanges. I like to see a flourishing community, whether that means developer community or whatnot. And then also we just evaluate it like we would a startup. What's the addressable market size? Is this something that is needed in the market? Who are the people behind it? Have they built this before? Have they sold a startup? Have they done something similar? Or, also, are the advisors on board? Are they actually advisors? Like, if you're listing an advisor on your pitch deck and I call them, do they know who you are? It's traditional diligence. There's nothing, I don't want to say there's anything special about it when it comes to the overall diligence. But the second part of the Cryptolandia is the protocol incentivization scheme. So if the protocol is not incentivized correctly, there's always the possibility of this growing in the wrong direction. So, like, Satoshi's original white paper was just a collection of incentive structures. It was nothing else. There was no code. So if you're able to overpower one side of the network via just a little bit of bad acting, then it's not a good protocol. Also, as the network proliferates, it should increase the value of the token. Otherwise, we shouldn't be investing in the token. And we've seen several out there that are not architected that way. Regardless of how good the idea is, I can't place an investment in that because we're fiduciaries. We need to make money with our investments.
Awesome, thank you.
I can extend that because, Thomas, I know you're working in this field as well, and I'm curious what your thoughts are on, it seems like one of the interesting phenomenon of using blockchain is that you now are in an environment where the core application itself, like if you're just trying to build a service that does a thing, at least with these sort of proof of work backings, you're intersecting with financial systems one way or another, whether you like it or not, through the creation of these tokens and these coins. And I'm just curious if you have any thoughts in sort of how the world is adapting to that, and what you see as the challenges or opportunities.
Yeah, I mean, I really fully agree with what was just said regarding kind of how we conduct due diligence. We're personally trying to develop some of the models that he was referring to in terms of how do you identify the proper incentive structure and make sure those things are in place. How do you ensure token design is done properly? One of our groups that's growing pretty fast is legal and code diligence. So basically security audits running on the code, because whereas from every bit of code leading up to basically 2008 had nothing to do with money. You couldn't directly hack and steal from an entity, whereas now any smart contract is essentially a financial contract if there's cryptocurrencies involved. So that's like a huge demand out there for that type of service. So I mean, again, it's still, we're super early days, obviously. So there's not a lot of concrete answers to these questions. I think it's we're all doing the best to kind of like again, like you mentioned, do the due diligence we can with the information available.
And we're not at Facebook days. We're, like you said, we're very early days. We're at protocol layer. We're at Apache Cassandra. We're at the first layers of the internet. If this is an internet corollary, we're way before even 1995 or 96. We're trying to get browsers, and we just don't even have those yet.
Felix, you mentioned you had a question. You want to speak to that?
Hi, yeah. I would just like your thoughts on the fundamentals of building a crypto portfolio, asset classes, utility tokens, traditional coins. Yeah.
For sure. So I think as an asset class, I would call cryptocurrency an asset class in general, just because they are incredibly correlated. I ran the past year of hourly pricing between the top 25 cryptos by market cap, and there's not a negative correlation, on the chart. So, when you say trying to break them out by industry, it's almost not worth doing. Also, I think the other thing that when you look at risk coefficients here is your storage. You need to be able to store this cold. I highly recommend the Ledger Nano S device. I think they're a fantastic company. Their CTO has been very open and very, I don't know what the word is. They're a very good company. They're very honest. They have millions of, I think almost 1 million devices in production or in the wild right now. So storage is the biggest thing. One thing that someone told me that hit me really hard was the long-term success rate of an exchange being hacked or not being hacked is 0. All exchanges have been hacked, and it seems like all of them will at one point or another, whether it's a small smart contract exploit or a full drain of the resources. That's a massive risk profile. And that's something that we have to spend a lot of time on. It's just pure storage of our assets. It's not like a stock where you have it at the custodian or at the broker and you click sell on E-Trade. Like, it's
so you wouldn't invest in anything that's currently not being able to be scored on cold stored on the Nano Ledger at any like.
I would never advise anyone to do that unless you've seen more of the interpersonal interactions between exchanges. So like, I mean, I do have exchange exposure, but I do monitor it. Like, I think if I click over to my portfolio monitoring, I'm at 3.14% exchange exposure. So like, yeah, I'm pissed about that, but it's at least a small number. If I look at my active trading portfolio, it's 100% exchange exposure, but it's an active trade. So I think you need to solve not only how you get your money in and out, how you get it into the market, which I think Coinbase is usually the go-to, how you get it out, probably Coinbase again, and then where you're storing it in the meantime. So I think Ledger or Trezor are your best bets there. You can do paper wallets, but there's just room for error. I think the Ledger device is like $70. So, and then once you want to build your portfolio, it depends on how much time you want to spend in it. I think Bitcoin, Ethereum are the go-to right now. If a 50-50 split, well, I should preface everything with I'm not your financial advisor. I'm actually not even a financial advisor. I'm a fund manager. So, it all has to do with your personal portfolio goals. But if you want to just have some exposure to this market, Bitcoin and Ethereum, I think, are the best place to start.
And just in general, anything that's not in the top 100 of coin market cap, that doesn't have any significant market cap, you don't really look at it all, or it's a state?
You know, it's all in what you know. Do you know the team behind it? Do you know that industry really well? If they're working on, say, the real estate title company blockchain project, and they happen to have been a CEO of a title company in the Fortune 500, that's a solid bet. And you know that before everyone else. So, you know, you can make a lot of money there, but that's active investing. You know, it's just like Wall Street. Everyone's talking. It's super incestuous, but there's a lot of money to be made.
Thank you.
Cool. Titian, did you want to share a question?
Yeah, absolutely. Great. I'm having a blast, guys. Thanks for doing this. I think the question is really about the value of different projects or different tokens. So I think that there are two parts to that. One is just around the room, and Zach and Thomas, you, Mike, you maybe, of whether there are projects that you've seen that you think are really powerful. I think, and that is not purely financial, but also of their impact as businesses or on society. So that's question one. And then I think question two is, does that really matter for just purely the financial value of a coin? Because when you described how you evaluate investment opportunities, I didn't really hear you say, we look at what the potential market is for this sort of like token to transact. So one is, what projects excite you? Two is, does the social impact of a project really determine its value?
I think anyone who knows me pretty well will know the answer, that the social impact doesn't affect financial returns. So, I mean, you know, we get measured in dollars, not polar bears, which, I mean, as much as you want to do good in the world, that's just not how you would evaluate a financial instrument. But when we look at the overarching size of the impact, whether that be in society and business, that is very much a factor in what we think. So if you're doing a blockchain solution for a small industry, it may be very cool, but how much money is running through there? So right now, when you look at something like, say, Ripple that's doing cross-border payments, and you look at just the amount of money that's being sent through the ACH and SWIFT system at the moment per day, it's trillions of dollars. And how much of that is being obfuscated, stolen, lost, fraudulent, returned, how much is sitting in pure float where no one's making money on it? You're looking at an absolutely massive market. And it's very hard to even value, just because this is something that's not country dependent. It's not in any one currency. So we absolutely do look at the potential impact for not just the right now application, but the application to the future. And I think that's where Ethereum comes in, for the re-architecture of how we think about trust and how we think about doing contracts. It opens up sections of the market that are unforeseen. It already has, and it will do so even more. One investment thesis I really like is opening up the bottom of a market. So while any high-level financial tool is really easy to do because there's a lot of money to be made, you can hire lawyers, accountants, all that shit. For the small stuff, say you're giving a loan for 45 cents to someone in a third world country, that process isn't possible, just because you can't afford to do it unless you're doing millions of them. When you use smart contracts and consensus ledger, you can afford to do those loans all day. And those people will pay them back. They're no different than people anywhere else. You just can't afford to do that transaction with traditional means. So you're talking about a market that's completely unforeseen that could come out of nowhere. So hopefully that answers the question. I don't know if I missed something.
No, that's fantastic. I think you mentioned two things that I strongly take away. I think number one is there is certainly an evaluation when you look at tokens, which is how big of an industry is this, i.e. cross-border, or for example, cross-border transactions. And then the second thing, what you just mentioned around what you call the bottom of a market, or I know as the long tail of many small transactions or customers, that's a very interesting place to play because of the fundamental design of what this technology is.
Yep. It's anytime you can remove that trust and you can use computers where computers are good and people where people are good, you can disintermediate those two things, and there's lots of value to be created for everyone, for all the stakeholders.
Cool. And just because we've had some more people join us, I'll invite anyone that has a question that's in the Hangouts to just mention it in the chat, and then we can sort of go to you and you can ask your question. Or if you're watching via YouTube, I'm also monitoring the YouTube chat, so you can leave a question there and I'll bring it up. And also I think this is an opportunity, for anyone to share their thoughts or insights on any of these questions. We can have an open conversation here. So if you're with us in the Hangouts, feel free to just join in and leave your comments as they come up. I think maybe one question to kind of like reframe some of this is, Zach, you must meet people who are saying, to you, listen, I know nothing about any of this. I don't know what a crypto is. But I feel like I'm going to be passed by this sort of phenomenon. I'm missing out. What's the sort of first and second thing I should be doing?
I think that question, the fear of missing out, is the most dangerous shit in the world when it comes to investing, because you let your emotions get involved and things fall apart. You lose a ton of money. But that being said, if you're seeing more and more smart people that you respect doing this and you want to be involved in some way, I think the first place to start is Satoshi's original white paper. Just read it. If it makes sense and you can grasp some of it, then possibly go read the Bitcoin and Ethereum primers on Coinbase. They've done a great job on that. Both of the Wikipedia entries are very, very good. And then my first thing would say, just make a small bet. Put a little bit of cash into it and see how it does. Start monitoring it, start reading more. But just sit on it. Just don't try to actively trade unless that's something that you've done in the past. Of course, if you're coming from Goldman and you've been trading currencies for 10 years, you should definitely trade this because it's very fat. But if you're just getting started, my advice would be buy a little bit so that you care to read, and then just start reading. It's regular investing. All of the fundamentals are still the same. It's just a new market. It's also very global. So if you have a global mindset, you'll do a lot better here.
Cool. I think we had a question from Milen Kaya. Do you want to share your question directly? Or I can paraphrase for you. So the question is on sustainability, and I think we sort of touched on this a little bit, but maybe we can get into it a little more. Since mining all the coins and the technology itself is so energy consuming, how do you think this problem will be solved and have an impact on the future of it?
For sure. Yeah, so the tech itself isn't energy consuming. And a lot of the coins aren't consuming any more energy than your individual computers running them. Maybe a couple of master nodes around, but you're talking a tiny amount of power in the grand scheme. Bitcoin mining and Ethereum mining, any type of proof of work mining consumes enormous amounts of energy. You're absolutely correct there. So it's part of what is happening here, part of why this all got started with proof of work is because it was the easiest way to let computers prove something. It's a limited resource in a computer. It's kind of the only limited resource. And we know that if you solve these functions or you complete these hashes, then you'll be rewarded, assuming you can find a block, which if you know mining, you have to go into a pool to have any chance of finding one. But anyway, so the proof of work mechanism is a big point of contention right now. You have people designing specific chips that are very good at mining, the ASIC chips, and then you have them cutting off those chips from the rest of the market. You have forks because some people are mining so much more efficiently than others. You have people spinning up massive mining operations in places that are very cheap electricity. So mining is a relic from the first part of this. It's the relic from the proof of the experiment. As time goes on, the shift towards proof of stake will happen. There's a couple of other proofing mechanisms, but the one that seems to be in the forefront is proof of stake, meaning those who own quite a bit of the asset are able to put their assets up to stake them. And in the threat of any bad action, they're able to burn that value. So if you have to put up 100,000 actions, you verify 100K is gone. So you're still having a perfect incentive structure, but it's just not as easy. There's a lot more to do there than pure mining. So while it is massive, it's a massive problem right now. It's something that's being solved. It's just being solved slowly. So that being said, if you're being pitched a mining opportunity, ignore it. It's all going to go away soon. So yeah, it's something that will solve itself with time.
Omri, did you want to extend that question a bit? I saw you were also asking about proof of stake and changing the value of Bitcoin.
Yeah, sure. So I was just wondering, because I feel like Bitcoin will probably be amongst the last of the cryptocurrencies to adopt proof of stake, because I think that Chinese miners have so much stake in keeping proof of work that will just be very slow. I wonder, what do you think it will do to the actual value of the Bitcoin currency versus Ethereum, which will probably be faster, or new projects that are kind of already on the way?
Yeah, it's going to be, it could be the downfall of Bitcoin, in all honesty. I mean, we're seeing a little bit of that right now. We're seeing just a lot of stuff that leads to Bitcoin maybe not being the gold standard, for a long time. They call it the flippening if Ethereum takes over Bitcoin, which has been something that most people have been discussing, but it didn't really seem like a reality until a lot of the recent issues. So yeah, the transition to proof of stake, I don't know if that'll ever happen on Bitcoin. And frankly, if you have an incentive to fuck over the miners, a lot of people are going to take it. So like, again, everyone's at odds with each other. So you have to assume that everyone's trying to attack you, and know that if it's more efficient to do something good than it is to do something bad, they'll do that. But if it's more efficient to do something bad, they're going to do that too. There's no rules. So when it comes to preserving mining, I think only those in very low power jurisdictions are thinking that. Those who have a huge vested interest. But those people also control a lot of the coin and have a lot of the power. But no one says that you can't leave Bitcoin to Ethereum once they do proof of stake. No one says you can't go to a pre-mined or a proof of stake currency. So you could kill them off as a market, not necessarily as an insider. So yeah, I don't know how that's going to play out, but that's going to be a major, major trading thesis over the next, I'd say, the next year. Unless one of the nation states wants to get involved and just wants to start mining at a loss, which is another interesting proposition, because you could kill a network by mining at a loss if you have nation state level resources.
I'll use the opportunity to ask another question. I wanted to know what you think about pre-sales, and specifically if you know of any research that shows if participating in pre-sales as a general kind of asset class is profitable or not.
Okay, so the general rule with pre-sales, or if there is a rule this early in the game, is access equals your returns. So if you have access to the best sales, you have a lot to win. It's just like venture capital. So if you're Andreessen Horowitz and you get the best deals, just, Google Ventures, you're going to make more money because the best people are coming to you for funding. They're giving you the best deals. Now, if you're a person who's just getting ICO alerts via email, you're probably not going to see the best deals, let alone be able to evaluate them. No one can do diligence at this speed. So people like Olaf at Polychain Capital, he's known for having the best deal flow in the industry. He's been doing it for the longest, and he's frankly a fantastic investor. So he will make very profitable ICO investments, whereas I publicly don't like ICOs, and I've been talking negatively about them forever. So I won't make any money doing them, but he will. So I would never say that on average they're a good idea. And then I wouldn't personally invest in them until we have a structure for legal clawbacks or a structure for non-performance. We do have these smart contract things which can automatically revert capital if requirements aren't hit, but rather we're just pooling $90 million into one account and saying, be careful with it, right? Because that's the state of the network right now. So I'm not a fan, again, but if you have special access, asymmetric knowledge always wins in investing.
Hidden, did you want to ask your question?
Hey, Zach, thanks for getting on here. With NASDAQ mentioning allowing futures trading on Bitcoin in mid-2018, what impact do you think that's going to have onto the market?
And so NASDAQ, I didn't see the NASDAQ announcement, but mid-20, like, that's awesome. On December 18th, the CME is going to be launching Bitcoin futures. So I think they'll be the first, and then with NASDAQ coming in. And so NASDAQ, I didn't see the NASDAQ. Is everything still working from my side? I heard myself for a little bit.
Yeah, sorry, Zach. It's Jazir here. I just joined a bit late, and I had YouTube open at the same time.
No worries, no worries. So it could do one of two things. It could destabilize the entire market. As a lot of people have said, a hedge fund billionaire took out a one-page, like a full-page ad in the Wall Street Journal saying that it's going to destabilize the entire futures market. I don't think it is because it's a tiny market, but I have no idea. I don't know if it's going to curb volatility a little bit, but it could do the exact opposite. It could make major swings, and it could make a lot of things happen really quickly. The CME minimum contract size is $40,000. So that's quite a big number in this market. So I have no idea. It's going to be interesting. I can tell you that I'm going to have some money in the market, but I'm going to take gains very quickly when they come, and then also only play with house money at that point. It's very, very hard to tell.
I had a personal question, which I'm interested in Jazir, maybe his thoughts as well as yours, Zach. As someone who, maybe a lot of people have gotten the basics down with a Coinbase or, some basic holding of some money and maybe, swapping it in and out here or there as there's some movement back and forth. What's sort of the next step up? Like if you wanted to move to a proper exchange, if you wanted to get into more aggressive trading, what would your advice be in terms of platforms and approaches?
I would put everything on your own skill set too. So if you're used to doing algorithmic trading and you're used to writing your own bots, you should use, GDAX and Bittrex API. That's going to be your best way to trade. They're the last to be degraded in terms of network congestion. So that's a fantastic way to trade if you're coming from that world. If you're coming from a public equities trading world, you have to know that most of your tools aren't available. So, there is no Bloomberg machine here. I use tradingview.com. They have the best charting I've seen. I think for like $70 a month, you get the full suite of their services, live to the second feeds from most exchanges for most of the coins. The exchange I use the most is Bittrex. So I use GDAX and Bittrex as my go-tos. GDAX does have an FDIC insurance on your USD holdings up to 100K, which is amazing. They do also report to the IRS, which, again, you're going to have to pay taxes. Just be aware. It's just like PayPal. Anything over 20K, they report. I think I would also just know what exchanges do what. Know what exchanges go to USD and know some that don't. So, for example, Bittrex will allow you to deposit. You can push $100,000 worth of Bitcoin into Bittrex and then try to withdraw it the next day. And withdrawals aren't going to be enabled because you didn't do the verification. So there's a lot of times where your money will get stuck because you just didn't read the terms and conditions, or you haven't read the pairs correctly. So make sure every exchange that you get into, know what they're capable of getting in, what they're capable of getting out, and the time limits for that. So like I said, Bittrex does not deal in USD. They only deal in crypto. Specifically, they use USDT, a tether currency, to try to match a USD correlation or coefficient, but I don't think it's true. I don't play with it. So, there's a lot of this that is denominated in crypto, not dollars or yen or anything. So be very, very careful and know that your cash could be locked up in one of these exchanges that doesn't deal in currency or in fiat currency at all. This is also from the view that I believe in fiat currency for the moment. Like I still can only buy cars with fiat. So I'm not trying to say that this is crypto from here on out. Exchanges to stay away from, Polionex. I have hundreds of negative experiences with them through friends, bad experiences myself, threatening legal action, all the way up to that, locking out hundreds of thousands of dollars. So I wouldn't mess with them at all.
Jazir, did you have any thoughts on what you've used and what you feel like is kind of the next step up from the Coinbases of the world?
Yeah, sure. So for context, hey guys, I'm Jazir. I got invited to speak here, but I had a time conflict, and I do have some sort of background. Briefly started a hedge fund, and actually I'm putting most of my crypto energy into development. So I can, yeah, actually I've got like a proposal to write for a bank of a small country for doing crypto for a lot of their like identity management and small payments and things like that. So I'm really focusing more on software development as opposed to trading. But I do still trade sort of on the side. And yeah, so directly to respond to your question, Michael, I think everything that Zach said makes perfect sense. He's really an expert here. I would add, sort of for fun, because I'm not really in the industry anymore, if you do have a strong feeling on the direction of some sites like BitMEX or Whale Club that will give you enhanced leverage. And I have seen bots actually. There's one I can direct you guys to if you're interested, that are pretty good at sort of finding directionally where the market's going to go. These things change all the time, and obviously you don't want to spend more money than or invest more than you can afford to lose. But I would say that if you do have a strong impulse directionally on where the market is headed, it completely makes sense to potentially use more leverage than, I don't even know if GDAX or Bittrex have leverage, but it may make sense to use leverage. The other thing I would say is if you're looking at trying to manage a sort of, if you're doing charting analysis, I totally agree with Zach. I think TradingView is really good. I'd also recommend checking out Coinigy, which is you actually can make trades on the website. But even if you don't want to do that, you can actually view charts for every major exchange, for every currency combination. And I personally use Coinigy a lot. You can have like standard default templates. That's really cool. And then the last thing, I don't know if this was mentioned earlier, but there's this website I think called investing.com. So if you get into technical analysis, you'll see that there are a few tools people will use, like the MACD, Bollinger Bands, etc. And they can get somewhat involved and somewhat complex to kind of figure out, okay, where do I think the price is going to go? It actually really makes sense to just get a quick snapshot, which investing.com will give you, of I think the price is going to go down based on the hourly or the daily sort of analyses of like something like 15 or 25 different technical indicators. So yeah, if you do end up getting into trading, I think those tools, in addition to what Zach said, make sense for your next step up.
Definitely different types of trading. You have your fundamental trading that's very long, the Berkshire Hathaway style, and then you have your quick trades, just like what Jazir was talking about. So technical indicators they're great when they work, but then also when shit is irrational, things go wrong quickly or really right quickly. So I think a mixture of the two is the good option, of being fundamentally long a lot of the things that you're trading. So like, for example, I'm never doing a short-term buy on a coin that I don't understand and want to own more of. I just get in and out quickly and take profits when I can. But I'm never going to be placing capital into some coin I've never heard of just because the technical indicators are giving me a good sign.
If anyone else has other questions, even really basic questions, don't be afraid to ask, what is leverage or anything. Sort of like a wide range of audience here. I'm curious, since Jazir, maybe you were talking about other, we focus more on the financial aspect. There's also all sorts of other uses of blockchain technology and a whole big future there. I'm curious what you think about the intersection between the two, how you think about the financial and maybe more technical aspects impact on the applications of blockchain to certain problem solving, and then what the adoption of blockchain technologies to solve certain problems, what that impact will have back towards the financial aspect of it. And Zach, if you have thoughts too.
Yeah, sure. So a great question, Michael. I could geek out on this a lot. I'm actually kind of open to maybe having a follow-up chat at some point. But so if you look at economics as a discipline, it's really just about resource management. It doesn't really pertain necessarily to currency. It's sort of about anything, any good or service that someone would want to buy in exchange for some other entity, some other good or service. And as societies have evolved, we've allowed ourselves to use different tools like money and bartering and then derivatives and futures and things like that to better express different agreements that we want to make with other people, dependent on certain sort of things being actually executed. And I think that blockchain technology, as everyone's pitching it, really does have the ability to take the next step in terms of allowing people to make even more complex agreements. So if you're unfamiliar with, say, Filecoin, which allows people to actually store individual files all across the the collective of different people's servers and local computers, it's going to be able to disrupt the storage space. So right now, Amazon and Google and these other centralized players have a lot of power over that. Filecoin allows basically anyone to host their own, really small data center. Same for Storj. And I could go on and on about, say, different use cases. There's a Wi-Fi coin I've heard that lets you share your Wi-Fi. There's Stream, literally just like an office right across from mine, which allows you to set up content sharing. So basically YouTube, but the files are stored on the blockchain. And basically this is allowing people to enter agreements where they can sell things that they otherwise wouldn't be able to. The other thing is that there's this push toward storage of information, like identity management and the integrity of individual items on the blockchain. So a lot of companies will come to us and say, we want to, we have some system that requires a certain amount of trust, and we have some trusted third party. Insurance is a great example, where you have to trust, say, the damages that have been done to a particular car or a house or whatever. Another one would be food. So you have to trust that when you buy 100 pounds of tuna fish, that you're actually getting tuna. And if you know anything about these systems, they're actually wrought with a lot of fraud. And these trusted third parties that you would expect to do verification, they may or may not do them adequately. So yes, to get to your question, Michael, I've seen a lot of use cases where people have these small ecosystems that require some trusted third party, and they all want to move their work to the blockchain. Everything from title deed management to, like I said, food, insurance, a lot of healthcare to ensure that specific things are done for individual patients, or for complex rollouts of new practices across a small administrative region. I think that this is a huge room for opportunity. And what I would say as it relates to raw economics is that a lot of what we have as government is really, it's really designed to enforce economic contracts. And so the government has the threat of violence that if you violate some economic contract, implicit or explicit, it has the ability to use force and make some other party whole. And we've given government a lot of power that we didn't necessarily expect or intend. We certainly didn't, collectively decide to do this as a group, and we don't do it in real time, certainly. Crypto, the fact that you can actually have a smart contract where the code is, in theory, law, it allows the ability to basically enforce a lot of these agreements that government is used to enforce simply through code. And it ultimately would allow us to say, not have government enforce a lot of the rules that it currently is. The political implications I'm not entirely sure of, because we would need to spend a lot of time actually taking this through courts and whatnot. But what I would say is that if you think about international trade, or you think about agreements that don't necessarily happen at present, we were able to exchange value much more quickly and without government kind of enabling or even enforcing rules. And I'm very, very bullish on crypto's ability to basically allow value to be created and exchanged in ways that it couldn't be done before.
And really quick, if I can hop in, also just like a clarifying note. I think it's good to also delineate the difference between cryptocurrency and blockchain technology, and make sure, just like if you're new to the space, those aren't synonymous terms. So just FYI.
Yeah, that's totally fair. Actually, most of the clients that I have when I'm talking about blockchain development, permissioned blockchains, which are networks that they control, and you can say, you're trading a cryptocurrency, you're trading an asset or something like that. But the difference between those, tokens or those currencies is that they actually have no value, and they're an entirely enclosed system that's controlled by a single entity. So that, I would say, is it allows a certain type of value exchange and value creation, but no one would want to pay money for those coins because they can be pre-mined or and controlled by a single entity. Then there is a separate group of cryptocurrencies that actually have value and are traded on the open market that Zach was discussing earlier. And those, I think, there's also a lot of value creation to be done there, but they're kind of separate beasts, and they're two kind of different flavors of value that's being offered to society. So good point.
And what I'd love to do maybe a slightly more blockchain-focused follow-up conversation. This was kind of thrown together pretty quickly over a WhatsApp group, but I think if people are willing to participate, we can continue the conversation. I think Jazir, you were saying, maybe doing a future session. So
yeah, sure.
Cool. Cool. So we're sort of at the top of the hour, but if people want to continue the conversation, I don't know, Zach, if you have time, or if other people want to chime in or other questions, we can certainly continue it. I think there was one additional question from Hitten, maybe. Did you want to share that?
Hey, this one's a more objective question for the experts on here. Like I did mention, I'm intending to get into the cryptocurrency market, partially with primarily two strategies. One with or the second one is buy and hold. And so far, the investment amount I'm looking to make is about $45,000 to $50,000. How would you diversify a portfolio of that size, and why? If it is of any interest, the way I'm looking at it is to anchor most of my investment with, let's say, 20-30% in Ether, 15% in Bitcoin, about 5 to 10% in Ripple, and 5 to 10% in Litecoin, and the rest could then be either for trading or for smaller altcoins.
Yeah, I can speak to this a little bit. In terms of the different coins out there in the investable universe, the amount of capital that you're trying to invest really doesn't have any bearing on really anything here, just because everything is infinitely divisible. So everything is divisible down to fractions of a penny. So it's your portfolio construction can be literally whatever you want it to be. I would focus more on your ability to store assets cold, which is going to be very big, and then also to manage those through the forks. So you want to store some Bitcoin, you want to anchor with Bitcoin, Ethereum, and Ripple, which I think is a great idea. I think I would possibly add some Bitcoin Cash in there, and that's something that I'm going to be doing over the next couple of days. And then monitoring that situation, because that is a big situation, frankly. So in terms of that breakdown, I think that's good. Again, everything here is so correlated. So if your Bitcoin is going to crash, so is Ethereum. Now, over the course of a full market downturn, what comes out of the other side could be very different. So if everything crashes down because of a fault in Bitcoin or a major catastrophic event, and the whole market crashes, who knows if Bitcoin will ever recover? It may be Ethereum that takes over in the end. So I don't know if a market cap weight is the best way to go. I think even a more equal weighting of those top coins is the way to go. And then keeping some cash on hand. My active portfolio is actually 50% cash on average, because you have to play the swings. So if I'm looking during the big event, like what happened, 2 days ago, yesterday, when, everything crashed for no reason, then I'm going to place some buys, especially in the coins that were unaffected by anything other than just correlation. So yeah, I think hold some stuff way long that you don't touch, I actually have them in 2 separate portfolios, which makes Coinigy not work for me, which sucks. But yeah, I think that weighting seems good. Cold storage everything you can, and then make sure you back up that cold storage, because again, that's that one point of failure. So make sure that that's backed up. I use safe deposit boxes. I like those for the backups, and then physical security of the devices.
Yeah, I'd back up everything Zach was saying. Some questions that I have for you that would add a little more. Do you have a specific risk profile or any targets that you're trying to hit with your investment?
Well, thanks for the question. Honestly, with the risk profile that I'm going for, well, honestly, I mean, considering cryptocurrencies, again, like we've discussed, it is currently a Pandora's box as well, even now. And I personally view cryptocurrencies still as a high-risk investment. So there are other, of course, investments that I've made which do give me some leverage on allowing this amount, like you said, Zach, this is money that, if I'm investing this money, I am prepared to lose the entire money. And of course, keeping cash at hand is something that I'm focused on, because like you said, if there are downturns like in the last couple of days, yes, of course, you need to put in some buy options. But I would consider myself to be a high-risk investor. And as of now, honestly, I am not keeping any preconceived notions as to what I expect. I am looking to invest this money at least for the next 6 months, and then take a look at my portfolio and decide if I either want to pull out or invest further.
Got it. That makes a lot of sense. I think that what I didn't hear is actually I think you gave a risk profile that you're saying you're high risk, but also you're depends on what you would think of for risk. There's actually numerical computations you can kind of get into for exactly sort of what amount of volatility you're willing to accept in your portfolio. And then as far as time frame, I think 6 months is totally fair. What I would say is there are individual events that so when my sort of trading style actually is to look for specific events that I may want to capitalize on. I think Bitcoin Cash is definitely something to particularly look out for. That it's basically sort of an alternative to Bitcoin that actually may supplant Bitcoin as sort of the de facto cryptocurrency in China, if not the entire world. Events around that are actually a really great opportunity for like outsized returns. Another one is NEO, this currency that there was some confusion about it, but it kind of looks like it's the official Chinese cryptocurrency for ICOs, so similar to Ethereum. Then there are other currencies. I've heard of a few good ones like something like a base coin or I think even Filecoin still, where they're very potentially amazing cryptocurrencies. You'd have to do a bit of work to get a pre-sale ICO access, or you'd have to wait for them to hit an exchange and really monitor them. But in any case, what I'm saying is that if you are sort of looking for high-risk things where you might want to basically do a lot of event-driven trading and focus on specific high-risk but high-return outcomes, I would look at individual coins and like some of the ones that I mentioned. There are others that actually have this opportunity for really solid growth. And then I think on the conservative side, if you want to call it that, I think mention makes sense, like Bitcoin and Ethereum. I'm actually incredibly skeptical of Ripple. We could go to town on a conversation about that, but I would say that a lot of people mention it as a sort of blue chipper, and I haven't seen it perform that way. And I'm super skeptical for a lot of reasons. But other than that, I think the other coins you said you addressed made perfect sense.
I'll put the comment into perspective. It's the only cryptocurrency with a team that's actually operating in the market. Everything else is an experiment. They're cash flow positive as a company.
That's true. It's also pre-mined, and it's unclear whether that value is going to circulate to traders.
Yep.
Cool. Well, I want to be respectful of time, so I'd like to formally conclude our session, although people can remain in the Hangout and continue chatting. I wanted to thank Zach in particular, our sort of resident Sandbox expert, for sort of being our conversation partner in this Sandbox talk, and everyone else who contributed. If you're not a member or familiar with Sandbox, you can learn more about our community at sandbox.is. And thank everyone for participating. It was an awesome turnout. Like I mentioned, we kind of did this last minute, threw it together, but I would love to have maybe a few more going forward. So stay tuned for news about that. Thanks, everyone.
Thanks, Mike.